Let's work through an example for the sale of plant assets. So this problem says Kelly Company purchased equipment for $130,000 on January 1st, 2016. The equipment has a salvage value of $10,000 and a useful life of 10 years. Kelly Company uses straight-line depreciation and recorded depreciation annually on December 31st. So we need to prepare the journal entries required for the following transaction. On June 1st, 2020, Kelly Company sells the equipment for $80,000. Now, before we can even work on that journal entry, we need to figure out how much has it depreciated so far. So we need to calculate our annual depreciation. We were told that they use straight line, so we calculate our annual depreciation by doing cost minus salvage divided by its useful life in years. So we plug in the numbers that we know. Our cost is $130,000, our salvage is $10,000, and its useful life in years is 10, leaving us with an annual depreciation expense of $12,000. So that's every single year. It's been multiple years though, right? So in 2016, we had it for all of 2016. So its depreciation expense was $12,000. And at the end of 2016, we had $12,000 then in accumulated depreciation. In 2017, we depreciated another $12,000 because we had it the full year. Now our accumulated depreciation is $24,000. It keeps building up on itself. Another $12,000 depreciated in 2018. Another $12,000 in 2019. So now we're up to $48,000 in accumulated depreciation. Now in 2020, it's only been a few months, right? We only had it through May. So we had it for 5 months. So we'll take that $12,000 and multiply it by 5 over 12 to see that our depreciation expense in 2020 should just be $5,000. So then what would our accumulated depreciation be at the point of this sale? $53,000, right? We were at $48,000. We depreciated another $5,000, taking us up to $53,000 worth of accumulated depreciation. So now that we have this information, now we can shift our focus over to the journal entries. First, we need to record 2020's depreciation. So we will debit our depreciation expense and credit accumulated depreciation equipment for that $5,000. Because we had already recorded 2016, 2017, 2018, and 2019's depreciation. The problem told us that we record that at the end of every single year. Here in 2020 though, we hadn't reached the end of the year yet, so we have to record this depreciation when we make this sale. So now to record the sale of the equipment. What accounts are we going to be looking at? Well, we will be receiving cash, right? We're selling this equipment, so we are getting cash, so we debit our cash. We also need to get our accumulated depreciation off of the books. Since we're selling this equipment, we want to get rid of the depreciation that was attached to that equipment. So we'll debit our accumulated depreciation. We also want to credit equipment because we need to show that that asset account is decreasing since we're selling this equipment. So let's start plugging in our numbers here. Cash, we got $80,000, right? It tells us that Kelly Company sells the equipment for $80,000. So we debit our cash $80,000. We debit accumulated depreciation $53,000, and we get that number from that chart in the upper right corner. And equipment, that's going to be the initial cost of the equipment. That was $130,000. So your debits and your credits don't equal. Why is that? Well, you either have a gain or a loss. And to figure out which one, we need to figure out our book value first. So we take cost minus accumulated depreciation. So that's $130,000 minus $53,000. So this equipment that we're selling is worth $77,000 on our books. We were able to get people to pay us $80,000. So we had a gain on the disposal of plant assets of $3,000. Now, let's switch it up a bit. Everything remains the same other than the selling price. So now Kelly Company is selling the equipment for $70,000. So we still need to record depreciation for 2020. It's going to look exactly the same as we did in our last example, right? We're just recording that $5,000 portion of our depreciation. Now, recording the sale of the equipment. Some of the accounts will be the same. We're still getting cash, so we still want to debit our cash. We still need to get our accumulated depreciation off of the books. And we're still selling equipment, right? So we debit cash, debit accumulated depreciation, and credit equipment. Let's start filling in the numbers here. Cash, that's our $70,000. That's the amount that we are selling the equipment for. Accumulated depreciation, that's still $53,000, which we get from that chart in the upper right. And equipment, that's still $130,000. That's the initial cost of the equipment. Now, again, your debits and credits don't equal. So we need to figure out if we have a gain or a loss. So we find our book value. Our book value is still $77,000. So this equipment to us is worth $77,000. We sold it for only $70,000, meaning we have a loss on the disposal of plant assets of $7,000.